This is David Patrick, Fitzstock Charts, Charts While You Sleep, Week 10, Weekend Market Analysis, and we are in a 4-day downtrend, just like that. 41-day uptrend on the NASDAQ we had this year. 40 days in the S&P. 40-day uptrend. The whole way up, what did I say? Don't pick tops, ride your winners with stops. And we did that. And we hit it out of the park. And the whole way up, I said, make your money now, because at some point, things will become much more difficult to trade. No trends and downtrends. We go into a few of those every year, and that's when the average trader loses money. And many average traders give back their entire year-to-date gains because they're over trading. They're trying to be smarter than the market. I gave a good analogy the other day to a subscriber that, if I gave you tickets to go fly out to Vegas, and I said, listen, you go down to the MGM, you got 50-50 odds. If you go down to Caesar's Palace, you got 70-30 odds. You go down to the Wynn Resorts, you got 80-20 odds. I mean, which place are you going to go to? Are you going to sit down at MGM at 50-50, which is downtrends? Are you going to say, where are you going to go? You're going to go to the Wynn Casino. That's the one that had the 80-20. You bet 800. We betted 900 when we were in an uptrend. So why do you feel you have to gamble all the time? You want to gamble when you have a trading edge. When you sit down at the blackjack table and you know you have an edge. You can't overtrade. You really have to become patient. I say it all the time. Patience is the hardest trade. You saw what I did the entire week. We gapped up on Monday. What did I do? I scaled gap up. Then we broke trend. I scaled more. Went from 130% to 80% to 40% to 30% to where I have right now, 15%. I have no idea where the market's going to go. I don't feel I have a trading edge right this moment. That's the reason why. I'm going to keep booking profits. Why wouldn't I? I don't have a trading edge when we're not in an uptrend. Now, many traders will argue with me. Why are you not short? Why do you say that you don't have to trade both sides? I get that. Okay? I get that. I was once there. And by all means, if you do it successfully, my hat goes off to you. I didn't do it successfully. My best year trading happened to be short in 2008. I think more or less I got lucky. I used my rules. I used historical chart pattern comparisons. And it was in a sustained bear market. It wasn't in one of these things that we saw last year that lasts a month and then you go right back up. It was a sustained bear market. And the market was telegraphing everything. We just went from a raging bull market to a bear market to back to a bull market. And now we're rolling back over. That's sloppy trading. And we have to capitalize when the market is not sloppy trading, which is the 40-day uptrends and which is the 11 uptrends we had last year, which we hit it out of the park with. Okay, so we've diverged from this 1980 pattern, by the way. We hit another grand slam with that historical. That's what I take a lot of pride in. I'm scanning thousands of charts looking for pattern repetition, and we've identified another one that we hit it out of the park with 1980. 40-day uptrend, 40-day uptrend. Now, we've diverged from that pattern. I believe we have break in the 200-day SMA, which we'll get to in a moment. And I'm constantly scanning, trying to find a pattern that looks similar right now. And I'll be honest with you, it's difficult because we don't have enough clues yet. We don't know, where the market's going to bounce, if it's going to bounce. We came into this week expecting at some point some sort of pullback after 40 straight days. Why? The week before monthly option expiration. We talk about it every single month. We often see some sort of pivotal lows put in. Now, I'm doing this video on Friday at noon. Are those pivotal lows in? I don't know. Maybe we go revisit those before 4 o'clock. The odds are that Thursday, Friday, one of those days, a pivotal low is put in. And then you bounce the following week. Does that have to happen? No. It's a pattern that has happened probably the majority of the time, probably over 70% of the time. So it's a nice statistic to go by. But we have to wait. We can't pick a bottom. If we are going to bounce, there'll be a bunch of longs setting up at least intraday using 5-minute rules of engagement next week. So I didn't do much trading this week because we went into a downtrend and I didn't want to trade. What I wanted to do was get out of my long market exposure, which I did mostly. That's what I wanted to do. Go back and look what I did in October. How much I posted. I went all cash. I went all cash pretty fast there. I sort of took my time this time, as I don't think we're going to see that type of pullback. But it doesn't matter what I think. I freed up cash. I booked huge profits. And now I'm in a good position because I'm not emotional. I don't have opinions. I'm just waiting. I already told you I don't have a trading edge. We did have a trading edge. We had an uptrend with historical chart pattern comparison, giving us the biggest trading edge you can get. We had a weekly time frame, daily time frame. Everything was bullish for 40 straight days. Now we don't have a trading edge. Now, can that change on Monday, Tuesday, Wednesday? Yes. But as of right now, you didn't see me do much after I sold. I wasn't even taking the long setups, the 5-minute rules of engagement, because number one, they're counter trend. Number two, I just want to get out. I want to get out of my longs to really get a grasp of where the next pattern is going to go. We'll get into that in a moment. We have 65 doublers, 65 options that are up over 90%, essentially doubling. Some are up to 300%. This is wrong. We're 10 weeks. So it's, 6.5 doublers a week. A little over one every trading day. Unheard of, even with this week. So are the pivotal lows in? I don't know. I'm looking at the markets right now. They're rolling over again. And we're down, 22 handles. I don't know where we're going to finish. Maybe we finish green. Maybe we'll go revisit lows. What you have to understand, and I say it until I'm blue in the face, is right now you don't have to trade. You have to preserve those huge gains you have, your trading capital. So when the next uptrend comes, you're not emotional, you didn't give back profits, and you're ready to roll. That can happen in days. It might not happen for a week. Who knows? That's not the point. The point is you have to use the methodology the right way. Or overtrading is not using the methodology the right way. Number one priority, preservation of capital, preservation of year-to-date gains. The easy money is the uptrends. I'm telling you right now, it's not easy to make money right now. Since Monday's gap up, it has not been easy to make money. Before that, I feel we were on easy street. All right, 90% club. 65 year-to-date, 21 triplers, 281 triplers since we launched, 1,009 basically doublers since we launched service back in 2013. Before we get into the markets live and the stocks live, so if, this is a big if because this is not updating, we're heading lower right now on the spiders, and we might take out new lows and create lower, 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 because that's the pattern. Lower highs, lower lows has been a pattern all week. But if wherever a bottom comes today, and we're able to build on that bottom next week, meaning the bottom, those whatever lows hold up Friday, wherever they end up being, I don't know if they're going to go lower or maybe they're already in. Who knows? It's never do we need to pick a top or bottom. But once they're in and you see rules of engagement, at least you can trade long versus. So let's just assume we go down another 50 handles and we go to 2,700 and we hold. We start headbutting up next week. You have these magnets right here. That's a gap, and this is a gap in the spiders. So I mentioned you could have upside potential to 277 on spiders if the lows hold on Friday come next week. Now, I will say this. Often you come in Monday morning, the market just turns on a different switch. It has no memory at all of what just happened. Is that a reason just to get long blindly? No, that's not using the rules of engagement. There's no rules to engage for swing longs right now. That's why you see me at 15% long market exposure. It might even be less by the end of the day. Who knows? So, all right, let's get right into the rest of the markets. I don't want to sound like deadbeat or down right now. I'm excited. I'm probably more excited now than I was weeks ago because at some point you knew the market was going to pull back. And this is great that it pulled back in the week that we thought it would, which is the week before option expiration. That's great. Now the hard part becomes is where are we going? And right now we don't know. Okay, so one historical chart pattern comparison that I looked at was 1998 here. It shows the Dow where you sort of bull flagged above after you hit a bottom, just like we did in here. You rallied, we rallied. And then when you pulled back, you broke trend. MACD bear crossed here in November 98. You pulled back all the way to this golden cross, 50 through the 200, which is coming next week. It's probably going to come Thursday, late next week. So, where are we in this pattern? It's too hard to tell. This is an early historical chart pattern comparison, and we have no idea. But I do think when and if we get down here, I do think there's a very good chance it holds. And then if it doesn't hold and bear flags below, then we got gaps galore to fill below. We just talked about some spider gaps above. But you don't really want to talk too much about gaps above when you're in a downtrend because you have to give the benefit of the doubt to the bears right now. The bears are winning. The bears are winning since Monday. They gap up. Right? They lost all year, but they're winning since Monday. So how long did it take this? Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days to double bottom at that golden cross. So we're at 1, 2, 3, 4, 5. So we're 5 days into this pattern. And, if this pattern stays on course, this is what I thought could happen, is maybe you see some sort of short squeeze before rolling back over. And it's too early to tell. I don't want to fall in love with this pattern because really I've scanned so many charts and I haven't really found a great pattern to look at. So I just don't think this is a great analog for us until we get more information. So we'll look at it. The bottom line is we are in a downtrend. We are preserving year-to-date gains. We are preserving capital. We are not over trading. And we are not going to predict that the pivotal lows are in until we see Monday, Tuesday's price action. That's the bottom line. Okay, let's get into the market. And let's look at the comp. And let me change. Well, first of all, let's do change, because someone had mentioned on Twitter, why can't you trade both sides? Well, number of reasons you can. First of all, if you are a professional, which most of us aren't, and you consistently make money shorting, then you can. I suggest, because most of us are not professionals here, that you don't need to trade both sides. But more importantly, when you're back in 2008, we were in a sustained bear market, there was two trades. Mostly it was cash or short, right? There was a few longs set up each year, but mostly that was the trade. This is our higher time frame, the weekly. The weekly still is bullish. MACD is bullish, heading straight up. Price is above the 10 SMA, which is heading up. So that's bullish. Now, this can change at any point in time, but I'm talking to you at 12:12 on Friday afternoon Eastern time. And so the higher time frame is still bullish. So it also goes into the thesis of, we possibly hit some sort of pivotal lows, bounce, and then maybe roll back over. And by the way, so let's just see what did that look back in before we look at the NASDAQ. What did the Dow Jones look like back in 98? I know it's not relatively close to the same pattern, but let's at least see. So yeah, it came down to this 10 SMA. It had 1, 2, 3 weeks, even broke it before it went higher. And I'm not predicting this, but I'm certainly keeping my mind open to if that historical price pattern would continue. And let's say we get into, we're in March, we get into April, and we do see this bounce. Then that comes into play more. But right now that we tested the 10 SMA, and that's going to probably be the minimum bogey for this downside on the Dow Jones. So even if we bounce next week, that 10 SMA is what, 25,000, and we're at 25.3. So you're talking about another 1.5%. If we're talking about the SPOOs or the spiders or the ES, what is that? 27 and 13, 40 handles. Maybe breaks 2,700 at some point next week. If we rally first and then we roll back over, that's a possibility that we break 2,700 and then see what happens. And where's 2,700? 2,700 right there. Remember, that's the 2681 is an area we really don't want to break. And I don't think it's as relevant as it was many days ago because most of us have already lightened up. So even if we do get stopped out there, that's not the end of the world. I'm only 15% long. I get stopped out there. It's nothing. But, this 50's curling up, and you don't want to, I would say you don't want us to close below the 50 2 days in a row. That would be not good. So I think the highest probability, and once again, take this with a grain of salt, is some sort of bounce just because that's the pattern going into the week. A week of option expiration, that we see maybe this happen before this. And we'll see if that happens or not. That's a historical chart pattern comparison. When we just looked at the Dow, that type of action happened. We'll see. And then, if that happens, then you'll probably have everybody and their brother saying, wow, this is either an MA top or a Head and Shoulders top. And then they short this leg down. This leg down actually holds. And then you go right back up. Anyway, the easy money is this. We already know that. 40-day uptrend. We're in a 4-day downtrend. This is the hard money. And this is the money, this is the trading that we like to avoid. Right? We can have a thesis or hypothesis or whatever you want to call it, a projection. But the bottom line is the market's going lower until it's not. And when it gets rules of engagement back above the 10 SMA, we can engage long. Until that happens, we are preserving capital. So let's flip to, did we look at the Qs? There's our Qs. And yeah, we're getting, you really don't, once again, I don't think you want to break that 50-day for more than 2 days. And if you do, I think the market's in bigger trouble than what we all think. Okay, XLF. And if the market's in trouble, it's not a bad thing either. Remember, the market was in trouble last year in October. I went all cash. What did that end up doing? It created a massive opportunity for us, being all cash going into this year, and we had a 40-day uptrend. So if the market breaks down, I don't think it's a reason to be frightened. You should have already done something about it or do something about it if it does. To me, all that does is create opportunity, because at some point it reverses back up, and that's opportunity. All right, XLF, I pointed out today's Friday that it was really odd because I don't think Goldman Sachs is much of a leader anymore. Goldman Sachs was the first stock on my screen that went green. The financials were not green at the time, but then Goldman Sachs was up $2. I think the market hit a high on the day and then rolled back over. But so what do you get out of this price pattern? Well, you get a high, a lower high, a lower high, and a lower high. So this, for the last 12 months, financials are bearish. All right. Now you can make some case head, left shoulder, right shoulder. In order for that pattern to exist, the inverse head and shoulders, we got to get back up here, and then we talk about that. All right, so right in here, this is not good. It's bouncing where it should. It's not a good trade. That's the bottom line. XLE did roll over. I got out of my ERX up in here, and it was a trade that I'd scaled, and then the runner got stopped. The runner did actually get stopped at a loss, but that's okay, because I'd already scaled. And that's, that goes back to that important question of many people asking, well, if you get a hold of a trade and you scale, then it keeps going. You got your only 25% runner and the stock goes to infinity. Well, that's when you add on price strength confirmation, which we've talked about in many videos. But on the flip side of it, when you've reduced the risk and then you get stopped on your runner, sometimes you break even, sometimes you still make money, and other times you might lose a tiny bit, net. And that risk management part keeps you in the game. And so I made some money in ERX, but the last, whatever I had running, that actually got stopped at a loss. And that's okay. And you have to understand that. I consider myself a pretty good trader, 20 years experience, but I have losses. And you'll have losses too. There's not one trader out there that's a real trader that doesn't have stock losses or bond losses or futures losses or options losses. That happens, and that's part of risk management. So I think sometimes posting trades there, whether losing with a runner or losing. By the way, getting back to those, so we've had 6 losing trades on the year. And I think we had 95 stocks engage. I believe so. And probably 4 or 5 that haven't paid yet. So that's still batting probably like 850, which is still amazing. I mean, it's crazy amazing. And once again, I said that those numbers will not be sustained. More realistic number, well, my goal since we launched the service is bat 750. If 3 out of 4 trades are winning and you are scaling and you're adding a price strength confirmation, the odds are stacked in your favor, at least in my eyes. Okay, so XLE, nothing really going on there. IYT, transports, yeah, they led the whole way up and they're leading the whole way down. They're in, a 8-day downtrend. But they're getting close to support. Yeah, I know a lot of these are, everyone's thinking inverse head and shoulders. Head and shoulders and inverse head and shoulders take a long time to develop and prove themselves. And I'll be honest with you, it's not a pattern I trade. It's a pattern I might look for. A trading pattern is MA or break of downtrends or bull flags. Trading inverse head and shoulders or a head and shoulders on a daily is very difficult. On 5 minutes, I can see taking those because it usually will develop within 24 hours. But something like this takes a lot of time. So whether this ends up being, other people are saying head, left shoulder, right shoulder, and then this is a head and shoulders, not an inverse head and shoulders. So I don't really love those patterns. You know the patterns I love: bull flag, break of downtrends, break of uptrends, MA, WVs. Those are the patterns I really like. And I like the Fibonacci's. I love Fibonacci's retracements and extensions. In fact, I'd like to do an educational video on elaborating on how I use those. And hopefully, I've had almost zero time, but things are, as this market does slow down, like it was a slow week, I will have more time to do these videos, which will be good. Okay, so IBB. Yeah, we talked about this over and over again. It was the strongest thing, led the uptrend. And I guess when it failed, they should have given us a heads up. It failed on that Monday, like the market did, and it came flying down. It is at pretty important support here. So we'll have to wait and see if the IBB is going to hold. But right now, I mean, that's a nasty downtrend that it just came into. We looked at the Dow Jones already. That's rolling over. Gold, you have a bear flag below the 50 SMA, very sloppy. These low prices were confirmed with MACD, so even if it would get back above the 10 SMA, that's too sloppy for me to take. Bonds, I like bonds a lot. I'm long some JP Morgan preferred yield in 6 1/8%. By the way, not only are we getting a yield on it, we're up a couple percent. So we're up on an annualized basis, 8%. I mean, that's more than the stock market's up this year, basically, in a bond. So I do like bonds. I like preferreds. I like bank preferreds like JP Morgan or even something like Goldman Sachs or Morgan Stanley or Bank of America. Those, I like those. And once again, that's my risk profile, trading time horizon. I actually might add to that because I just like having 20% in fixed income. If you scroll back to when we launched the service, I had put 10% in United States Treasury strips, posted it, and added to it. And had 20% in long strips. So I was able to make some good money on the strips. And I do think, once again, I talked about the bottom on the bonds, I think is in. We saw the golden cross, and I think bonds are going higher. Now, I wanted them to get down here before they go higher. I just don't think that's going to happen. I have a feeling that bonds are going to be taking out highs by summertime. Now, if I'm wrong, I've been known to be wrong before, but that's my thesis. I look at that and I see it resembles a lot of historical chart pattern comparisons that's embedded in my brain. And this is just a bullish scenario, especially when you see a golden cross after the death cross, the golden cross, you come back and you stop everyone out they got long there, and then you just go back to new high. So I'm bullish bonds. So we'll see what happens with that. Apple. So I was long Apple, and I think I trimmed it down to, I think it's 5%. I was 20%. I trimmed it on this day, and we started rolling back over, trimmed it, and then trimmed it again. Said, you know what? It got knocked out of trend. And this pattern should have went up here, and it didn't. So the fact that it didn't, I don't have a trading edge anymore. So if I don't have a trading edge, what do? I either get out or book profits, and I did both. So I think I'm only long 5% Apple now. Stop at entry, and it is what it is. And if I do get stopped, I think this can come down here pretty easy. And I do actually think eventually it does get down to 163, 164 because how bad the market looks. Now, we might bounce before that happens, but the market doesn't look good. So Amazon, yeah, that failure at the 200 SMA tells me that thing, if we even bounce next week, is coming back here to 1,500. So I think these FANG stocks that look like they might have possibly led us to the next leg higher have proven otherwise, and I think they actually could lead us to the next leg lower to test some moving averages. So Netflix, same thing, does not look good to me. Booking, bearish. Tesla, bearish. Google actually looks okay. It did break trend, broke the 10 SMA. The pattern's still fine to me. Probably one of the stronger ones. Roku, if I had to be long anything, it probably would be Roku. I still think Roku's going to new highs. Probably, if this might be on the ESFL actually for a counter trend trade. So you get long this versus the lows we just saw on Thursday, Friday. That's a very strong stock showing relative strength, and for a counter trend trade for someone who's risky can take that. Nvidia, very sloppy. That bottoming process, we're going to let it happen. Micron, AMD, yeah, the chips. I came in long, Soxel, scaled, and I'm glad I did because this melted down pretty hard. And I don't know where that thing's going right now. Right now, we're letting things breathe. Avgo, OLED. I certainly don't see any leaders. I don't see anything that looks like a long setup besides bonds and Roku right now. Microsoft. And once again, a lot of times when that happens, when you see none, that's another reason why you could rally. Sometimes you just rally when everything looks as dismal as it does, which that's the case right now. Although the weekly time frame is still bullish, charts and daily look really bad. But at the same token, it does not surprise me at all if we rip before we roll back over. That actually makes the most sense. Coop, now, yeah, these are all looking like they could bounce and then they're going to roll back over. Workday, jobs, and none of them look good. None of them look bullish. FFIV, oh yeah, that one actually looks like it wants new lows. Facebook. So, yeah, that was one that I had a historical chart pattern comparison, and I think I had scaled, and then we saw that gap down the next day. I scaled 85%. I had a 15% runner, and I took a loss in the last 15% early, and this thing just melted. So that was a nice, I hate to even say this, but that was a nice loss on my 15% runner because it could have got destroyed. I mean, the runner could have basically went to zero if you're talking about options. So I'm quick. I scale quick. I get out quick. I add quick. I put on size. I don't overthink things. The Facebook was not doing when it broke that previous day's low, I knew something was wrong. Right? If I can get rid of some of this stuff here. Clear. Yeah. So I'm in here. I took this as a day trade. Scaled, left 15% runner on. What I get the next day? I got slapped in the face. I had a gap down. Well, that slap in the face came when breaking that low. If this thing was really going to continue higher, the odds of it filling this gap are not good. Usually this breakout keeps going. That's a pattern that I would say 75 to 80% of the time keeps going higher. Well, guess what? It's not 75 to 80% of the time. It's the other. It's the 20 to 25%, right? And that's when risk management comes into play. So if you manage your risk and you took it or you stopped it, I think you did the right thing. I don't know where the stock goes. It's a long way down, but it didn't do what we wanted it to do on the way up. So when that happens, you just back off. I was talking to somebody in a trader consultation. Actually, I was talking to a good friend too about this, and I've told many people this. If you get something like Facebook and you get stopped out, whether you scaled, didn't scale, or whatever, and you take a loss on it, whether it was your initial position or your runner. never feel like you have to go back to that stock. That stock does not owe you anything. It doesn't know anything about you, and it certainly doesn't owe you. So, I'm not going back to Facebook anytime soon. Not that I'm mad at it for losing on that 15% runner. Just until that stock resets up, I'm not going to chase it either way. It's right now it's telling me it's slop. I've traded Facebook a lot since we launched service, and you've seen those trades. With that said, I've made a fortune. No, I don't want to say a fortune. I've made some good money on it. But also, recently, like we just talked about, you're going to have losing trades. You have to manage those. Snap, yeah, it got to that double digits rolling back over, and I wouldn't be surprised if that goes now back to $6.50, $7. So I don't like to trade stocks under $10, but that was a nice setup we talked about. Baba failing, and this was a leader. Baidu starting to roll over, and that was starting to catch a bid the other day, which was crazy. Some other leaders that were leading for a while starting to break trend. CYBR. Now we'll see. It's holding up pretty well, but we're going to find out a lot more of BMW, eBay. These are big, big, big leaders leading us that are starting to roll over, if not rolled over already. Shop, Box, Team, SQ. These are leaders. Let's go to the banks. JP Morgan, they don't look like good trades. They're at key supports. The market should bounce. And by the way, some Goldman Sachs and some of these stocks might lead the way on the bounce, but those are not the stocks that you want to see lead the way right now. I can tell you that right now. You don't want to see them lead and then FANG stocks lag. That would create increased heaviness the next time around to touch that golden cross we talked about in the Dow Jones, which I think is possible either late next week or the week after. But we'll see what happens. I'm not gonna predict the tape. We had a great roadmap with 1980 for 40 days, right? We don't have a great roadmap right now, and we're gonna wait. We're gonna wait till we have a better one. CME, ICE. Let's talk a little bit about CME. And I brought this up to a subscriber. So this one was a great trade last year. All these longs. It was on the ESFL, I think 2 or 3 times, in the 90% club at least once, maybe twice. But you get toppy here, and to me, as a technician and trader, this right here I've seen happen before, and you go to new highs. So this pattern doesn't concern me until you break the 200 SMA. And then you're talking about now you have bigger, more reasons to be concerned. Because you got lower highs, lower highs, lower highs, lower highs, and now you got lower lows. Now, I thought back in here we would bear flag below. We didn't. We reversed. And actually, you could have taken it long and scaled. We broke an uptrend line here, and if you were obviously a bear, you could short it. You saw, a bear flag below this uptrend line. And, I will say this. A lot of times you'll see on a breakout candle, I post bull flag breakout. We haven't really seen the flag yet. We just have seen the pole. So, yeah, I guess I'm looking into the future a little bit when I'm talking about a bear flag or a bull flag when the pole's just developed and we haven't seen the flag. I get that. That's whatever. So I had mentioned this is bear flagging below 200 SMA. So theoretically, I guess if you're a true technician, you might not think that's a bear flag. I classified. Price is grinding lower after thrusting below. This is a bear flag on top of a bear flag to me. So it is what it is. It doesn't matter. It doesn't matter what you call it. Because all you have to know is it in a uptrend or downtrend? And is it above key moving averages or below? So it's in a downtrend. It's below the 200, the 50, and the 10. So there's nothing bullish about it. Nothing. So it doesn't matter what pattern you want to call it. And I might not call patterns. I call patterns how I see it. That's just how I see it. Okay, so when you look at a weekly, this thing hasn't broke the 50 SMA in a long time from a topping pattern. I mean, right in here it did. That was 2014. Went a little bit lower before going back higher. Back in here, obviously it collapsed. So I don't know where this thing goes. The bottom line is it's bearish. And if you pull up fibs, it still has a long way to go. I don't think it's a great short setup right now because I think right now it might be flushed out. What I would like to see Once again, you could have already shorted it, but if you really were shorted, I'd like to see a true grind back up and fail at this, and then break another uptrend line to reshort. I think that's a good setup to see it if you're looking to short that stock. CBOE, I think that goes to new lows. That looks very bad. ICE, I think ICE is going to a 52-week low. That does not look good, and that might be setting up short very soon. Oils, COP looks horrible. PSX looks horrible. CVX looks okay. Exxon looks okay. Diamond Offshore, Marathon. These have all come up quite a bit and now look like garbage. To be honest with you, Oxy looks horrible. That looks like a short candidate. Talk about going to Vegas and for the best odds, a win, failing at the 200 SMA. A true WV bottom comes and makes a V. And then you don't get long again. You just have so many long setups on this until it gets back above here. If and when that happens, it's going to create another huge buying opportunity. But we're going to let the market tell us, is this going to new lows or is it going to create a V? And we're not going to predict that. It's not our job. Amgen looks horrible. Guild, not good. Alexion, if I can type it. That looks like a bear setup. ISRG. Yeah, it's holding some key moving averages. That one's all right. RGN was a big leader, starting to roll over. The sector looks horrid. This looks really bad. Chipotle's holding up. Monster's melting down. Twillo grinding to no man's land. I mean, we're almost 40 minutes in. I have to summarize what we're talking about here, just so we can. We go into 40-day uptrend. That's easy street. If you're not making money in a 40-day uptrend, you did something wrong. And then you need to reevaluate. And that's why I have these trader consultations. I'm here to help. The last thing I want is anybody using the methodology and not making money in uptrends. If you're using the methodology in downtrends and not making money, it doesn't bother me as much because I pound the table on you don't need to trade. And you don't. So if you are trading, you don't have a trading edge, that's it. You're gambling, and you're going to lose some, you're going to win some. That's fine. But if you're not making money in uptrends using the methodology, yeah, I'd love to talk to you. Because that's when you make your money. But if you're trading in these downtrends and losing all your year-to-date gains, you're just not listening to me, period. It's not that you're not listening to the methodology, you're just not listening to me. So I can't help you because you're not listening to me. It's so important that you understand. I mean, I am very patient, and when it comes to trading, I'm very patient. In life, I'm not patient at all. People that know me know that for a fact. But with that said, when it comes to trading, I didn't used to be patient. I had to develop that skill. It's like an athlete. You got to develop your basketball skills, your baseball skills. You got to develop these skills. You can't just go out there and compete because you're an athlete. People will pass you up. You got to develop skills. You can't just come in trading because you got a lot of money or you just traded a 40-day uptrend. You think you're smart. No. You got to have a skill set. And that skill set, fortunately or unfortunately, includes patience, discipline, right? And so right now you need patience and discipline. Wait things out. See where we go. All right? You know what I did. Like I always post on Twitter, you know my positions, you know my entries, you know my scales, you know my stops. You knew the whole way up. I wrote it, added, scaled, added, scaled, added. You saw Monday, scaled, went down to 80%, 40%, 30%, 15%. Heck, I even sold some on Friday, and I know, I don't know, but I'm hoping that there's a pivotal low put in, and I'm selling into, anything. Because I'm just trying to book profits because I don't have a trading edge right now. This is a trading edge when we go up like this. This is not. This is sloppy, and I say it over and over again. It's where average traders lose year-to-date profits in their capital. They don't listen. So don't be average. Okay, use the methodology the right way. That's all I have for you. Have a great weekend.